Since 1914, we are men of vision, men of service, men of culture, men of leadership. Phi Beta Sigma Fraternity, Incorporated.
Welcome to Operation Hope, an organization dedicated to promoting financial dignity through financial literacy and empowerment, helping turn renters into buyers and the disqualified into homeowners, molding entrepreneurial ideas and aspirations into viable small businesses, inspiring young people to take hold of their futures and make their dreams come true, promoting financial wellness in the workplace, helping to bring financial wholeness and peace of mind. Standing with survivors, helping them restore dignity and rebuild their lives after a disaster. We are Operation Hope, working together to create a brighter financial future for us all. Join us as we continue to transform lives through financial dignity in the 21st century.
Good evening. On behalf of Phi Beta Sigma alumni, the big
Good evening, everyone. Looks like Brother Antonio Williams is here with us and is a little bit frozen, but welcome to our next episode in our home buying series. I'm Brother Dr. Theo Fowles. I'm the Western Region Director of Education for Phi Beta Sigma Fraternity Incorporated, and I run the tech and background for the chapter here. We're excited to have Isabel Duran here with us this evening again, along with her counterpart, Rosa, as well, who will be our guides here this evening as we learn a little bit more about the home buying process. We're going to share our screen here in a minute. We're going to go over this time around diving deeper into not only the down payment assistance programs, but also reviewing purchase agreements and other details that first-time home buyers may run into. And so with that, I'm going to move into the background. I'm also going to share a PowerPoint as well that will help folks get started. Let me go ahead and do that. And I will let Isabel take it away. And Isabel, if you could give us just another brief introduction of who you are, as well as for Rosa as well, just as a brief hello to everyone here tonight.
Thank you, Dr. Theo. My name is Isabel Duran. I am a coach for Operation Hope. I provide credit counseling. I help people improve their credit score and their budget, always for the goal of buying a house in the future. I'm also a HUD-approved educator for the first-time home buyer workshop. And tonight we're going to continue with part 2 with the help of Rosa Amaya, who's one of the best lenders I've ever known, only because she really works hard and she's taken a lot of training with different programs. And it's really exciting to hear how she explains the down payment assistance programs, because it really gives us hope for folks who are wanting to buy homes, but they just aren't ready at the moment, but we're helping them become ready for the next moment that comes up for them. So, part one was going over the assessment, going over the readiness for people who want to buy homes, certain questions they need to consider and answer, going over the differences between renting and owning, the pros and cons, going over the budget and credit report, and then getting them ready to talk to the lender. Then we had Rosa talk about the loan programs, uh, how they calculate and look at in order to qualify you for a loan, and all the details that a lot of people don't understand about mortgages and loans. And then we talked about uh, choosing a real estate agent or a broker or a, a partner who's in real estate, and what they do to help you find a house, what their job is, and how they take care of their clients and take care of any kind of problems that come up. And then they do the negotiating, offering to purchase a house or not, maybe looking at another house and putting an offer in. And then hopefully an offer will be accepted. And then that's when they sign the purchase agreement, which we're going to talk after the down payment assistance programs. Um, and then
Perfect. Perfect.
we're going to go and try to close this up with escrow and insurance and the closing. So next slide is about down payment assistance programs. You want to take it from there, Rosa?
Sure. I don't see the slides though.
Awesome. So, um, the slides basically share that the down payment assistance programs are loans that are placed in a second position to your first mortgage, and that therefore down payment or closing cost, that they're usually deferred and require no monthly payment, and that you can request a shared appreciation, and then the repayment is due upon sale, title transfer, and first mortgage payment. So those are some things that open up the first slide as well.
All right. So, one of the things that the down payment assistance programs do is help you to make sure that you have an affordable payment from the beginning. One thing also that the program wants to make sure is that you are considered a first-time home buyer. Um, okay, I see the slides now. Thank you. Um, as the slide is mentioning, they're in second position. What does second position mean? When you go and apply for a loan, you will receive a first mortgage from the bank, and that's what you qualify for based on your income, on your credit, and the total debts that you have. So you have a first mortgage loan. The second mortgage would be some type of down payment assistance program that you may be eligible for. As the slide states, those funds can be used towards down payment to lower your loan amount, and also can be split to cover your closing costs. So for assistance, we'll talk about some of the programs are available. One of the programs offers up to 140,000. So let's say to make your mortgage payment affordable, all you need is 100,000. So, but you still qualify for the rest of the funds. We could use some of those additional funds up to the 140 to help you with the closing costs portion of it. These loans are deferred, meaning they do not require an payment originally to start with. You'll have those monthly payments at the end of when you finish paying your first mortgage. When we talk about share appreciation, it means that you're going to need to share a percentage of the equity of your mortgage value that you have acquired. So in 30 years, when you purchase this home at the beginning of the term, the house could be 400,000. In 30 years, your house could be up to 650 or 800,000. Of course, the program doesn't charge you an interest, but they would like to continue to have funds available to help other individuals. So they'll request either a percentage of that share equity to be able to allocate more funds in the future and have more funds available as well. How is that appreciation determined? Is the loan amount divided by the value of the home or the purchase price, and that gives us a percentage. As stated, it does not have a repayment unless you sell the property, and now the loan is due. If you transfer the title of your home to someone else, or the property is no longer your primary residence. So, three reasons for that loan to require a payment are those three. You must maintain it as your primary residence.
Okay,
So,
next.
so Rosa, I'm gonna jump in real quick. If if I'm looking to buy my first home, am I should I be saving up for a little nest egg, and also applying to a down payment assistance program, or are there down payment assistance programs that provide a fuller cost, or a fuller amount that can be used for that initial cost?
Right, right. All of the down payment assistance program require for you to put at least 1%, 2%, or 3% of your own funds. When we say 1%, it's 1% of the purchase price. So you will still need to have some of your own funds to purchase your home. And I would say if the funds are available and they're there and you qualify for them, of course you want to use them. The more assistance you get, the more affordable your monthly payment would be. And instead of paying a rent, now you're paying a mortgage that's still within your budget. So definitely layer as many programs as possible. And when I say layer, we mean let's use up as many programs that you qualify for in order to maintain that monthly payment as comfortable as possible.
So we have some average median incomes here. Are these California based? Tell us a little bit about these numbers. I think this will be helpful to put things in perspective for folks.
Yes. So all of the programs have income requirements. Do you have those light up? Because it's not changing on my screen.
You want me to dictate to you?
um, if you
Well,
have them, but
yeah,
that medium income, let's say for a household of one, if you make under 66,750, you would qualify for the maximum amount of 140,000. If you're over that income limit, there are some programs available that are offered through the city of LA. So if you're at 66,751, but under 100,050 for one person household, you could still qualify for some assistance. It'll just be less. So for that second number that I gave, you would qualify for 115,000 in assistance. If you're
mhm.
over that income, those two numbers that I gave you, the 66,751 up to 100,050, if you're over that number, you could still get assistance. You could get up to $90,000, but there's also a cap of how much income it could be. And it's the same thing based on household size. How many people are in your household? The income is increased, and it's a little different for each additional family member on the house. So what we do is we review to see what is the maximum household size, and what's the maximum income in order to see your eligibility. And every program will have either 80% average medium income limits, or if they're able to use up to 120,000, it qualifies. Some of those additional programs that have been added, increasing the income limits, is because the government has noticed that even though you may be making a little bit more income, you're right over the threshold of the income limits, you still need assistance. It doesn't mean just because you're making more income it's still making it affordable. It just means you have other debts as well. You may have enough money for the down payment but not for the closing costs, or because of the sales price being so high, you're still not able to afford that next step. So they want to assist everyone, and every city has different programs available. So we could always check to see what city are you looking to buy, what are the income requirements, are you eligible, and what else can we add to help you maximize your purchase power and maintaining that mortgage payment affordable.
Perfect, perfect. And you know how we know that Rosa's an expert? She said, I can't even see the slides, and I know these numbers like the back of my hand, right?
Well, I memorized the household of one, so I make sure that I know that number. And since they just changed the numbers for the income limits for the other programs, the other ones I don't know yet, but I'm working on them.
So question for you before we move to the next slide here, and we'll walk through that one. So just for the folks that are out there, like, am I a household of one? How does someone know if they're a household of one? Is it just that they're single? Are they in other types of relationships? We could just put that out there so that people know for sure that they are a household of one.
Right. So we go based on the tax return. And usually your tax return and your pay stub will match as a single person, one individual, a single filing. If there's a difference, let's say you were married last year, but now you're divorced, we will count the single, not the last year's tax returns. We would require that documentation to provide verification to the city that you are now a single individual.
Awesome, awesome, man. And we have this next slide here that talks about the city of LA Housing Department and LIPA. It looks like 90,000 up to 140,000 for only purchases in the city of Los Angeles, and there's a price limit of under 973,750 for single family homes, and they have other things here for condos and townhomes as well. So I know that you mentioned that a little bit earlier as well. Looks like Rosa dropped off for just a second. Looks like she's back now. Um, so it definitely looks like, as you mentioned, there's some limits there for folks. And so let's jump into some actual programs here. And the first one here that's listed is the Wish Grant Program, which is the 4-to-1 match. Can you talk a little bit about that?
Yes. So the Federal Reserve Bank of San Francisco sponsors this program. So different banks are able to apply to be part of these funds. This one is a grant. Really free money that you don't have to pay back ever. It's a 4-to-1 match, and you are required to invest into your purchase of your home the minimum amount of 5,500 so that you could obtain the maximum of 22,000. This is also placed in second position. So let's say you qualify for the city assistance. You have your first mortgage, then you have the city assistance. We could add this one in third position or second position as a grant. This program is forgiven after 5 years. Every year, the program will determine if you're still if you're still in the property, and they will forgive 20%. After the fifth year, this amount is completely gone away, and you receive a notice stating that the funds have been completely forgiven. So, this is a true grant. Very few grants available out there. This one's one that's has continue to come back. It used to offer 15,000. It's gone up. It went up to 18 and now 22,000. The funds just exhausted right now in the beginning of November, but they will reopen in March. Usually around April, we receive the notice that the funds come back available. And it's a pool of funds. So we have 20, 30 different banks pulling for these funds that are allocated. So sometimes it goes quicker than other times, but it's an amount of funds available that it could help. And remember, this one's free. You don't have to pay back. So it's an awesome program.
And just to clarify, in terms of the process of applying for a program like this all happens at the same time as you would the down payment assistance as well. So all of these are happening at the same time. Is that correct?
Yes, correct. So we have three different files going for each one. If you're applying for your mortgage, if you're applying for the city assistance, and then this one. So if we ask you for documentation, it's not that we're being nosy with your documents. It's just that this is government funds. So we have to provide explanation on every single item that they could think of. Deposits, who's part of your family, what documents do you need to provide from them. So it's a list of about 30 items that we have to provide for the city program, for the wish program, and anything that they could think of that they need to verify, they will call us and let us know, get us this. So we're not being nosy, we just need to make sure that we're meeting their guidelines.
Mm. And and I know that we're in the conversation today about these opportunities, these programs, but when someone is going through the process of home buying, who is the person that is looking out to see uh, if someone should be applying to these programs? Is it the individual that says, "Hey, I know about these programs. I want to make sure that my bank or my realtor know that I'm applying to these programs"? Like, who is a part of that kind of process, I would say?
So you're in great hands with Operation Hope because they know all of the programs are available. So they would be their first. They would be your first point of contact to find out about the programs. If a loan officer is approved and has the experience with the down payment programs, they will let you know. Hey, listen, in looking and reviewing your documentation, it seems like you qualify for these programs, and there are funds available at the moment. So would you like to apply? This is what we would need. This is what it entails, and give you all the information about the program. If and sometimes it's not that they don't know the program, it's just that it is work, and not every bank has the loan officer dedicated to using this individual programs because there's training involved, staying up to date with the information, the 30 list of items that we have to submit and get from you. So the back and forth in getting the documents could be very time consuming. So you have to have a
Gotcha.
loan officer that's dedicated and willing to provide that information up front.
That makes sense. That makes sense. And the next one here on the screen is programs in Los Angeles County. Looks like the HOP program, home
Yes.
ownership program, $85,000 or less, or lesser of 20% purchase price. You gotta see if the county office to see if the funds are available, like you mentioned with the previous program as well. So it looks like funds are there, and as the year goes on, things dissipate, right? So uh,
Right.
definitely be sure to check out this www.lacda.org for this particular opportunity.
Right. So the difference between the city program and the county program is that we have the unincorporated areas of LA County and the incorporated areas. So we have certain areas that qualify for the LIPA, the $140,000 assistance, and then we have the other areas that are just in the boundaries that do not qualify. So that's where the county comes in with the HOP program. With the city of LA, you have funds available year round with the LIPA. and then the other two programs may run out, but the county only is available 6 times a year. And sometimes they have more funds available and they'll let the loan officers know we still have some funds available to meet the reservation request. But they open every once
Quarter.
every other month at 9 o'clock in the morning on the date of the application being open, the list being open. We have to submit the reservation with purchase contract, with your signed forms, verification of deposit, and also with credit report to verify that you qualify for the program. We submit that, and they only open about 10 to 12 spots. So we have to verify that if you're going to get the funds, you're going to be able to move forward. If not, if you need the funds to close the transaction, then it's in the borrower's hands to make a decision whether they want to move forward with the loan or not. So this one's a little bit more risky than the other program.
Gotcha, gotcha. I definitely was going to ask how competitive or how many spots there usually are. And having been in the homeowning process before, I know that things can move quickly and things can move very slowly. So it's good to understand some basic timelines of how things come about. Um,
Right.
I'm
So
gonna
with
move.
both programs, in the talking about timing, with both programs, we need anywhere from 45 to 60-day escrow. So if, let's say, you open up escrow today, the funds for the county will be available until January of next year. So you have to make the decision, I have to move forward or not with this transaction by myself, because the funds are not available at the moment, and the seller might not be willing to wait that 60-90 day process in order to complete your purchase. Unlike the city, 45 days, funds are there, we could move forward.
Makes sense. Makes sense. We'll move right along here. We've got looks like the California Housing Finance Agency. All names that flow right off the tongue and easy to remember.
So with this Los Angeles County, with the CalHAFA program, one thing that you have to know and be familiar is that your loan officer has to be approved to be able to use this assistance programs. So with the County of LA, they have income limits. You must make under $180,000 a year to qualify. So this program is for all of California, but we have a few of the counties here to provide you the information. This one's very specific in regards to credit score. You have to have at least a 660 or higher credit score to qualify, and the funds for these programs vary. All of them are loans, which means you will have to pay this back at the time that you refinance your mortgage. So if you receive the $10,000 assistance program, you, at the time that you decide, oh, rates are dropping and I want to go ahead and refinance, you would have to also add that to your loan and pay them off. One thing that I like to advise individuals is take advantage of the program, because you need the assistance right now and the funds are available. Use it if you qualify for it. No one's going to help you with free money. There's very few grants. So if the funds are there, take advantage of it and use them.
Gotcha, gotcha. And I see that there's for this particular program, there's some special shout outs to school employees and fire department employees with no caps on some of their info
Right.
as well here.
So before, the school assistance program was only for teachers. You had to verify and provide the information that you were certified. Now it's open to all of the employees of the schools, K through 12, charter schools, or USDs, unified districts as well. So it could be from your teacher to the administrator, your principal, your maintenance person, your cafeteria employees could take advantage of the program, unlike before that it was only for the teachers.
Well, that's good to know.
Yes, because we all need the help.
Right, right. And looks like we got some specific programs for cities. This one's here is for for Garden Grow. Folks can see that one right here on the screen. We'll see what's next here in the slide deck. We got NPHS opportunity. Let's talk about this one. I see some large dollar amounts here. $100,000 with 30-year deferral, 60-day escrow for
Right.
first-time home buyers. Look, look, all the acronyms, all the acronyms. I
Right.
see.
So this program is very specific through an organization that offers counseling assistance, NPHS. They offer this down payment assistance up to 100,000. As it states here, it has to be a 60-day escrow, very specific, and their debt to income ratio is also very specific. You cannot go over 38 over 45%. And I know in the previous class that we had, we talked about those debt to income ratios. The debt to
Mhm.
income ratio means the amount of income that we're using to pay the total debts. That would be your 45 number. So your projected monthly mortgage payment plus the credit card debts or student loan payments, any debt that you have on your credit report is your DTI or your debt to income ratio. The housing ratio would be your just the projected monthly mortgage payment. So we have to make sure that those two numbers are met. So they're very strict in regards to what's the maximum income that we could use to pay the mortgage and what's the maximum income that we can use to pay the total debts. And the program is awesome because it covers all of San Bernardino, Riverside, and East Los Angeles. And they're willing to layer within different programs as well. So we could have the city assistance and another grant. And it's an awesome program to be able to help you.
Oh, look at that. Look at us spreading our wings. We love LA, but we giving some shout outs to San Bernardino, Riverside, and East Los. Let's go.
We have to. We're moving out of LA because we see the prices are changing in LA specific. So where can we buy to be able to make this affordable and still reach the home ownership goal?
That makes sense. That makes sense. So to that end, we've got another program here, NHSIE, their SOAR program, and that looks like it's up to 10K as well. So go ahead and take note of that if you're watching this now or even a little bit later.
So this one
Uh,
can be layered with some of the other programs that we talked about. So
mhm.
definitely can be added to maximize your purchase power.
And then again, here's another one that's specific to Montebello. So again, be on top of what's available in your individual cities as well. So as I see these different opportunities per city come up, where can someone find uh, you know a listing of these different opportunities if they're new to a city, say they're just moving to Montebello, outside of them seeing it here today, where would they find this type of information on a city's website, or
On the
where would they
city's
find
website, under community development, they would have specific program information. And you could always walk into the city and find out, do you have any assistance programs? And they will guide you in the right direction of who to speak to.
Gotcha, gotcha. So check out your city's website. Look under community development. I always try to go to the bottom of the page and see what's in the smallest prints. That's where lots of the information is that that people don't take
Yes.
advantage of. But again, here's one for the city of Pomona. I know we have some folks in our brotherhood out that way as well. We've got Santa Barbara County out this way. 16.5% up to $100,000. Ooh, we got some larger percentages over here. Anybody want to be in Santa Barbara, right?
I do.
A
There you
little
go.
shack, a little shack.
That's right. Look,
The good
it'll be
thing is
your
that
little
it's a,
shack. As long as it's yours, right? So again,
Yeah.
here are
exactly.
some of those requirements and those opportunities. We've got Rosemead here with a down payment. Is that what DP stands for? DP
Yes,
equals
yes.
70,000. All right. Look at me, I'm learning. I see, huh? You're not the only one
That's what
learning,
we're here to help
Doc-
you.
right?
Dr. Theo, you can go to the website and go to California down payment assistance, and it'll give you a list of all the counties in the county of, I'm sorry, in the state of California, and they'll give you a list of down payment assistance programs. But then you have to go in and make sure they're still alive.
Right.
And is that under the Operation Hope website, or the state? Is that the state of California website you were talking about?
The state.
Just you just look, like when you're searching California down payment assistance in California, and it's amazing what's in the website.
Awesome,
So
awesome. Let's see.
yeah.
All right,
And
so
if you're not sure of a program, just let your loan officer know. I heard about this program. Do you offer it? Are you familiar with it, or can you refer me to a loan officer? The best way to try to find out about the program is going into the bank and talking to your lender. Find out what they have available.
perfect, perfect. That makes sense. Um, you know what?
Rosa, don't some banks have some assistance, like a grant,
I'm
like
sorry.
some banks have assistance for down payment and closing costs just from their own funds, right?
Yes, yes. So each bank may have a pool allocated to help with down payment assistance. You do have to meet the requirement, either income based or the property has to be located in a certain area, which is considered low to moderate census tract. So you have to make sure that you ask them, do you have any funds? Union Bank at the moment offers a $12,000 grant that you don't have to pay back as long as either the property or your income meets the guidelines. And it could be used for LA County, Contra Costa, Alameda, San Diego, Orange County, and for other counties we offer 9,000. So we're
Mm,
able to provide some assistance that's forgiven right away, money that you don't have to pay back. So different banks will have those type of funds, or they'll have similar to the grant, such as the Wish, which will be forgiven during a period of time. So those are great. So always ask, what do you have that you can help me with?
all right. Always ask the question. How can you help me? Um,
Exactly.
and,
There's
and,
always
and
money there, believe me.
there's always money. We just have to figure out where it is. Um,
Exactly.
we have about 20 minutes or so left, and I wanted to make sure that we dive into understanding the purchase agreement. The purchase agreement for those that are new, right? And you're buying your first home, you'll get this stack of paper that says you're signing your life away for this home. And it's a bunch of paper with a notary and all these different things and tabs on tabs. And your hand will get tired as you sign your life away. But what we're going to do now is take a moment to really understand what's in that document, what you should know as you sign it or before you sign as well. And we'll hop right into that right now.
Perfect.
Looks like we got a shout out from Brother So on Facebook. Says this is some very good information. Everybody take notes.
Right.
All
Okay.
right, so we've got these topics here. Isabel, you want to run through this really quickly?
Sure. Topics to be covered. What is the residential purchase agreement? We're going to talk about time is of the essence, loan terms, contingencies, liabilities, making a competitive offer, buyer's inspection advisory, close of escrow. So this pertains to the purchase agreement. So when you are with your real estate agent or broker and you get an offer accepted and you sit down with the seller and their agent and your agent, and purchase agreement comes out, and you're going to be signing the purchase agreement. But what we want is for you to understand what's in the purchase agreement, because it does affect what you're going to buy and what you're signing for. And a lot of people are really concerned about, well, what if something happens? Do I get my deposit back? So we want to cover that too. So what is the residential purchase agreement? So it's an offer to purchase a property. It's also a joint escrow instructions. We're going to cover escrow real quick. And it's typically to be submitted with offer. In order to get the offer on your purchase agreement, you do need a pre-approval letter from your lender, a copy of good faith deposit, and a personal statement or a personal statement with the letter. You can state that I really like this house. It's perfect for me and my family. It's just what I wanted. And I'm going to take real good care of this house. And when does it become a contract? It becomes a contract when both parties sign the contract. Next slide. So the residential purchase agreement is a contract. It is a binding agreement between two or more persons or parties, and it's legally enforceable. And in it, there will be stated, you're going to fill it in, or your broker will fill it in, the price that you are offering to buy the house, the financing information, or you're going to pay with all cash. And then you're going to have conditions, which means you're going to have an inspection done, take a look and see if there's any repairs needed. Also, the property will be reviewed by your broker or real estate agent, whether it has local ordinances that you have to be aware of. Some properties have a railroad going through, or you're next to an airport. These things have to be disclosed. And then what's included, excluded from the sale. So you go into the house and you love the refrigerator because it's a modern refrigerator. You love the washer and dryer, and you ask if they can keep it here in the house, and you'll pay for it. Or you don't want anything in the house. You want just an empty house because you have your own things. So those are things that have to be stated on the purchase agreement and agreed to on that. Next slide. Time is of the essence. So there's some items that have to be disclosed. This contract will be going to the escrow office. Escrow is a period of time where the escrow officer works with the seller and with the buyer, make sure that all the documents required are being given to the escrow officer to make sure everything's complete, everything's followed legally, and the time of when you want to close escrow, when the loan's going to be approved, the main loan approved, and the date that you estimate that when you're going to close is on the contract. The initial deposit is usually 1% of the purchase price, and you give a check. You don't give cash to the seller, to your agent. It goes strictly to escrow because they're the ones who are certified to take care of the money. And it's a good faith deposit because you really want this house. And then if you want to make the offer stronger, you may want to say, well, I'm going to increase the deposit in a couple of weeks when I get more money. Balance of the purchase price, and then the loan terms are all written out on that contract. Next slide.
Well, I have a quick question for folks, and for you, Isabel. I know I'm a big fan of watching house hunting shows, and people go in and they make their offer and whatnot. What happens when your you're looking at multiple houses and you like maybe one or two, right? Can you put in multiple offers? How does that work uh, in terms of this process? If there's maybe a house or two that you're interested in, but you're not sure if you're going to get accepted, what does that kind of look like in terms of this process?
Um, the real estate broker that we work with in our other workshops does state that when they show houses, they first start with a list of houses and they ask the clients to take a look. And if there's any particular houses you want to see personally, then you make a schedule of on a Saturday, you're going to look at 3 houses. So they make appointments with the seller agent, say, we'd like to stop at 10 in the morning on this house, the second house at 1, the third house at 3 o'clock. And if they like all 3 houses, they will submit an offer. Because right now, the way housing inventory is low, you do have a lot of offers per house that's being sold. So you want to put in your offer to make sure that maybe you'll get a chance to get approved for that.
So I just wanted to point that out because putting in the offer doesn't commit you to the house until both parties sign the document.
Right. The offer has to be accepted by the seller and saying, I really like Rosa. She has a family and the house would be perfect for her, as opposed to the other folks. They're single. They might be party people. So the offer's accepted, and it goes back and forth and say, well, let's say Rosa says, well, I want the house, but I also want the washer and dryer. So you want to put that in the contract also, and the seller will say, okay, I really don't need these washer and dryers. So there's a timeline in the contract. So this page is about the loan terms. So the loan application, first and second mortgage, if it's conventional, if it's FHA or VA, will be listed in the contract as they agree to.
Just
So
to add, in regards to submitting multiple offers, it just opens up the more opportunities for you, and now you have a choice. With this property, like Isabel mentioned, I have the opportunity to negotiate of getting the washer and dryer. The other property, the seller is adamant that they will not leave any of the appliances for me. So now I have options. This one has um, an additional bedroom, but it's not giving me the washer and dryer. So you're able to evaluate which one's going to be more beneficial, which one will fit your needs. So that's a great thing to do. Just because the property doesn't have all the amenities you're looking for, just submit the offer. If you like it enough where you can see yourself as the homeowner in that complex, in that property, go ahead and submit it.
Mm-hmm. That makes sense. I'll push to another slide. I know we're coming down to the last 10 minutes or so. But
So
this is
that's
what
what
that
a
document
contract looks like, how they enter the items, the deposits, the loan. Um, so don't be afraid. The contract is like almost 25 pages, but it just includes all the items of the house that you're buying. So next page. Okay, so this is where we talk about in case we have to cancel and you want your deposit back. We're talking about contingencies and liabilities. So contingencies are conditions. We're gonna close escrow, but these conditions have to be completed. So there's a loan contingency. We need to make sure that they are going to approve the loan. We got pre-approval, but now they're going to review everything in my tax return and my income. They're going to talk to my employer. So they're going to check all my bank statements. And so they just want to make sure everything's correct and in place. And then there's the appraisal. The lender will call the appraisal company and ask for an appraisal done within 2 weeks. Appraisal has to come back with a fair value that's close to the purchase price. Then we suggest home inspections to make sure you know the condition of the home. If it's not a new home, if it's a 10-year-old home, how long will the roof last? What's the condition of the electrical connections, the plumbing? And then if there's any other contingencies, then it has to be removed. If all these things are completed, there's going to be a final walkthrough. And if everything's in place and you're happy and everything's completed, you've been approved, the appraisal came out perfect, the inspection looks good, then you do need to sign a paper saying that all these things are completed. I am approving to remove the contingencies. Once that's been signed and turned in, then escrow starts continuing to finish with the loan documents. And if you move in and there's something not missing, you really can't get your deposit back after that unless you go to arbitration.
Gotcha.
So that's why there's a lot of things really checked. Escrow makes sure everything's checked. Your realty, your broker, your real estate agent works with you to make sure everything's done and there's no remorse on this part. Next slide. So if the buyer fails to complete the purchase because of buyer's default, seller shall retain as liquidated damages the deposit actually paid, or up to 3% of the purchase price. So if the contract says you're going to close escrow in 45 days and you really haven't done your part of your homework, seller can say, hey, I want my deposit, but you only put in 1%, or they can ask you for 3%. You're not going to lose all of your money. Okay.
Gotcha.
Next slide. And we're almost done. Mediation, arbitration. So if you have a final walkthrough and there's no washer and dryer, but it's in the contract that they would leave it, then you would have to talk to a mediation and get arbitration and say, well, he signed that he was going to give me the washer and dryer. Where is it? And so the seller has to come up with, and the arbitration will figure a way to satisfy the claim.
Perfect.
Okay. Yeah. So during the review of the property and the inspection, the seller typically pays for the natural hazard zone disclosure report. All the properties are reviewed to see where they're located, if they're in a flood zone or there's something other hazard zones type of thing. Maybe the property was built over what is this? I know Montebello has like a little mountain there where they're rebuilding over. It used to be an oil field, and they covered it, and so they need to make sure there's no hazards from that. So those are reports that the seller usually pays for to make sure that the property that you're buying is not in a hazard zone. So some buildings will need retrofit. I haven't seen that for a long time because we haven't had any earthquakes. But again, seller typically pays for the government required retrofit. Other costs, seller typically pays for county transfer tax. So your property taxes need to be transferred from the seller to the buyer, and there's a fee for that the county charges. And so a buyer-seller splits on that transfer fee. Okay.
Awesome. I'm not gonna move to the next slide. We're about 5 minutes out. I wanted to stop sharing my screen here and maybe bring up Brother Williams as we do a little bit of a summation. I know this was definitely some of the meat and potatoes that we wanted to get to before. Um, and I think we'll continue to have this as a series for sure. But let me go ahead and hide my screen and bring back up Brother Williams as well. Um, and I think what I wanted to close with was really just to talk about uh, why we wanted to uh, talk about first time home buyer information in the first place and why we're all here tonight, in terms of why is it important to own a home and why even go through this tedious process, even if it's two parts, right? So Brother Williams, let's start with you, just in wrapping here. Why do you feel home ownership is important? And then we'll pass it to our experts for the evening as well.
Oh, home ownership is the key to wealth. It's a beginning place where you can use to gain other assets. So the importance of it is critical to understand. And so I thank Isabel for attending tonight and Rosa as
Rosa.
well. I can't tell there. I can see myself now, but it was great just to listen. I'll close it out and I kind of jumbled beginning, but this is for the Phi Beta Sigma alumni chapter of Phi Beta Sigma and the Bigger and Better Business Committee. I'm Dr. Antonio Williams, the director of Bigger and Better Business, and I appreciate Isabel and Rosa taking the time and Dr. Fowles taking the time to go over this topic. So I'll pass it back to you, Dr. Fowles.
Yeah, and in closing, Isabel, share a little bit about um, maybe a success story of folks that you've worked with over the time that have gone through this process, right? I know that this process can be long and intimidating, uh, but in your mind, why is it worth it?
It's one of the investments that everyone can try to get, as opposed to going to the stock market or going to a different kind of investing product. Buying a house is to me very exciting. I learned from my parents. They worked really hard. We're immigrants and we worked really hard. They bought a house, they paid for it, and then they had to sell the house because of eminent domain, and then buy another house, and still work hard, and then I saw how they could retire and not have to pay rent and just enjoy their house, and it's just the best investment you can get. And I really enjoy giving these workshops because I want to help people understand the many steps they have to take, but also to be prepared, because right now it's a little difficult to find all these houses. But once you're prepared, once you're ready, you know you're going to turn around and say, "Oh my God, there's a house for sale. Let me go there and make an offer because I'm ready. I can get a loan. I can get a down payment assistance. I'm ready." That's what we want to get people, is just to be ready and take the opportunity, and then they're going to live forever. It's just wonderful.
Awesome. So I'm so glad you said that. I think that this process does take some time, but the beginning portion of it is really the education piece of it, right? Uh, Sometimes it takes a long time to wrap your mind around uh, even considering yourself to be ready to be a homeowner. And so,
It's a big
we want
step.
to have these workshops so that people give themselves the time to learn, and then also the time to get all their paperwork, their money, all in order as well. And so we're gonna close out tonight right at the top of the hour, but we want to encourage you to join us at our next next session. If you're watching on YouTube, you can go ahead and hit that subscribe button, the notification bell. It'll let you know when we're going live again for our next workshop. And we'll continue to work with Operation Hope. We love working with Operation Hope as they are a national partner of our fraternity as well. And so that's one of the ways that we look to reach more and more people here locally, is with our local partners that represent our national partners as well. So with that, we'll sign off for today, and we'll see y'all in the next video. Have a good one, everyone.
Thank you.
Evening.
Thank you.